Good morning to you all. The new strategic plan for EBID, which is a very revolutionary plan, very strategic and innovative. This strategic plan shows that EBID is strategically positioned to support the entire region. It justifies the reason why we are organizing this webinar on a very important theme, assessing EBID's enhanced private sector and SMI funding. Good morning to you all once again. I would like to welcome our panelists and also a warm welcome to all participants who are joining us online. EBID is repositioning itself to play a very significant role in promoting SMEs and SMIs in West Africa. The bank is a key partner in promoting competitivity and also promoting regional value chain. The bank is expected to be a key pillar in transforming our respective economies, our private sector financing, and what have you. In our new strategic plan, 6% of our funding is dedicated to private sector financing. This is a very huge figure. And this new commitments, 22% of which are concentrated for financing SMEs and SMIs. This is a new strategic positioning of the bank. It is also important for all of us to know that the SMEs and SMIs, they play a key role in the promotion of employment in our respective countries. But unfortunately, and this is a key matter, these SMEs and SMIs are having it very tough in accessing financing for their respective activities. And there are many reasons to this. First and foremost, there are little understanding of available financing resources. Secondly, the process for applying for financing is so cumbersome. The process is such that one needs to cut through a lot of red tapes before accessing financing. And finally, we have capacity constraints. And these are the three key problems SMEs and SMIs are facing in accessing funding. The reason for which we have organized this webinar, a webinar that is bringing together stakeholders, financial institutions, SMEs and SMIs, regional banks, and it is hoped that at the end of this webinar, we will share experiences, we will build our capacities as in how to access financing. The panelists are carefully selected. They are people who are experts, not only in the field, but also have been on the field themselves. I would like to welcome our panelists, and I will give the floor to each of our panelists 1 minute each to introduce themselves. I will give the floor to Madam Simon Tebaiba, who is a Deputy Regional Secretary for promoting financing for SMEs and SMIs in Togo. Madam Simone, you have the floor. Thank you very much, Mr. Gosu. I am privileged and honored to be the first to take the floor to introduce myself. My name is Simone Debaima. I am the General Secretary for the National Agency for Promoting Financing to SMEs and SMIs. The institution has been in existence for some years now, We support SMEs and SMIs across the territories of Togo. Myself, I'm a financial analyst. I have worked on so many projects, state-owned projects in the agricultural sector. We always support SMEs and SMIs. Therefore, everything having to do with development and access to financing, that has always been my interest. Thank you. Thank you, Madam Simone. Thank you for participating in this webinar. I'd like to give the floor to Madam Benedicta, who is the Executive Secretary. You have the floor to introduce yourself.
Thank you very much, Dr. Gosu. My name is Benedicta. I am the Executive Chair of the African Trade Chamber, headquartered in Accra, Ghana. As a chamber, we have been working across the continent to position the private sector to drive economic transformation on the continent. And working in the various regions of the continent, we see that West Africa has been a very vibrant region in terms of SME development, and it is a pleasure for us to join you today for this webinar. Thank you.
Thank you, Benedicta. We are very proud of you for your invaluable contribution to the development of our continent, and thank you for your loyalty to EBID. Welcome, welcome again.
You know, I give the floor to Mr. Michel Dafan, who is the acting CEO for EcoBank Togo. Thank you very much. And I am equally honored to be part of this webinar. My name is Michael Dafan. I have an executive MBA from Paris, as well as I hold another professional certificate in management. I'm a banker by profession, and currently I am the regional director for commercial banks in the UM1 region. And secondly, I am the deputy director for EcoBank Togo. I am very passionate about SMEs and SMIs, and I have been working with them for the past 10 years, especially in the UM1 zone. We all do understand pretty much well how SMEs and SMIs suffer before they access funding. And I'm very honored by this webinar, the importance EBID is given to SMEs and SMIs. Thank you very much, Michelle. We are honored to have you on this webinar. We are going to bring another dimension to this. As we have already highlighted, SMEs suffer a lot in accessing financing. Meanwhile, there are funding resources and sources that are available, but they do not have how and where to go. Therefore, we need this dimension, a practical dimension. And then all of you on this webinar today, as panelists, you do have them, and you are going to share them with us. We have SMEs and SMIs, we have project owners that are all connected across board to listen to your world of experiences. Thank you once again. I would like to just cross-check if the English speakers are hearing the interpretation. We want to know whether you can hear the interpretation. If you can hear, kindly say it in the chat for us to know that everything's going on
We would
well.
like to make sure that you'll be able to follow us from the beginning to the end and very efficiently. So feel free to let us know whether there is any issue or not. Thank you so much.
We will now give the floor to Mr. Hugh Caesar Goa, who is the Director of the Department of Private Sector Operations, to introduce himself and make his presentation. Thank you, Dr. Gosu. Thank you for your MC abilities. I never knew that. I would like to thank the organizers of this webinar. My name is Hugh Caesar Goa, and I am the Director of the Department of Private Sector Operations. I am an engineer by profession, as well as a financial analyst. Initially, I was the director of the Public Sector Department, a department I headed for some 15 years. And it's been 2 years now, I'll be heading the Private Sector Department. I'm happy to be contributing my quota to the development of the continent. And I'm happy to be part of this wonderful, well-qualified and experienced panelists. I would like to thank you very much, Mr. Moderator. Thank you, Director Caesar Goa. It is not for any reason that you were the last person to introduce yourself. Let's now go into the nitty-gritties of this webinar. We want you to give us a rundown on the EBID strategy, and we cannot have any other person better positioned to share that initiative and idea and strategy of EBID with us than you yourself, somebody who has headed the private sector before and now heading, who headed the public sector before and now heading the private sector. We want you to give us a brief presentation of this strategy and how important SMEs and SMIs are for the bank a bit. Thank you, Mr. Goa. Thank you, Dr. Gosu. Before I proceed, those who are joining this webinar but do not know of EBID, I would like to introduce EBID to them briefly. EBID is the ECOWAS Bank for Investment and Development, and it is the financial arm of ECOWAS. Just as you have the AFDB for the entire Africa and the BOAD for the UEMOA countries. In line with the mandates of EBID, the bank put in place a new strategy based on 3 pillars. First, a pillar that is the growth strategy. The first one is growth, the second is resilience, and then the third is optimization of resources. Under the first pillar, growth, we want to grow the activities of the bank in a very exponential but prudent and sustainable manner. We want to be able to master all the risks that are involved and also do as much as we can to promote the impact of the bank in the ECOWAS communities. We can only do that by significantly increasing investments, enhancing financial development across the ECOWAS region. In the same pillar, which is growth, the private sector was positioned as the engine of that 2030 vision of EBID. We'll come back on that. And the second pillar is resilience. The global and West African context, as we know today, is experiencing a lot of mutation, changes, new trends. And it is in the same context that EBID is also trying to promote sustainability of our impact by complying with all the international standards and norms in terms of governance, in terms of control, and also by strengthening the private sector operations. In the same vein, risk is very important, and the bank will ensure that all these operations are done by considering the risk that are involved. The third pillar is optimization. You know, we need to optimize the use of resources to have a quick, significant, and sustainable impact by being more prudent, more efficient in the use of our resources. We want to allocate resources in a very key and prudent manner by mitigating all the identified risks. Therefore, ladies and gentlemen, these are the three pillars that constitute the 2030 strategy of the bank. As I mentioned earlier, the strategy put key focus on private sector, and it will take 33% of all the interventions of the bank by 2030. As you do know, the private sector contributes to the tune of 19.6% to the GDP of the ECOWAS countries, which is in average a bit lower than what the Asian countries produce. We're talking about around between 10 to 22%. And more often than not, when SMEs are applying for financing, they ask a lot of guarantees, and the red tapes that they need to cut through is more often than not impossible. It means that SMEs are operating in a very critical and difficult context. It is against this backdrop that EBID has put in place this initiative and enshrined it in their 2030 strategy. We want to ensure that 33% of our financing are dedicated to the private sector, specifically SMEs and SMIs, in sectors such as the agriculture sector with a minimum of 12% contribution, transportation, infrastructure with 15%, energy, we are looking at 28%, and industry, we are looking at 723 billion USD that will be allocated to the industry sector. We are not in any way forgetting services and the service sector. For education sector, the bank is looking at contributing 7%, and for health, water, and sanitation, same 7%. A specific emphasis will be put on the real estate sector to enhance availability of affordable housing schemes for our people. Therefore, Mr. Moderator, not to monopolize the floor, this is what I can say about 2030 strategy of EBID, which is putting the private sector in the limelight as a key sector in boosting the economies of West Africa. And the bank, EBID, your bank, is a key partner in that. Thank you, Director Goa. Thank you for this presentation of the 2030 EBID strategy. It's a very comprehensive strategy that is taking into account all matters concerning financing for SMEs and SMIs and the private sector. For those who have just joined the webinar, we want you to understand that there is interpretation services that is going on. Select English or French or the language of your choice and listen.
Thank you so much, Director Goa. Benedicta, Director Goa has just given a comprehensive view presentation of the new strategic plan of EBID, strategic plan 2030. As the executive director of the International Trade Chamber, what's your view on the matter?
Thank you very much, Director Goa. And I think that what we've heard from EBID and having taken some time to look at the synopsis of the strategic plan, I would join in the many that have said that EBID is positioning itself to be the development bank that the region has been sort of yearning for over the years. We know that the SMEs and also informal trade constitute a significant portion of economic activity in the region. And so beginning to see EBID as the development bank of West Africa, positioning and prioritizing private sector funding as well as the SME funding is really important and commendable. And on this note, on behalf of the African Trade Chamber, I'd like to commend EBID for this prioritization of the private sector in its strategy. The issues confronting the private sector when it comes to growth as well as expansion in the region is very much known. And as a chamber engaging with several private sector players, you realize that, yes, there is increased activity between countries. There's increased activity of SMEs and private sector in the region across borders. But there have been still some pertinent issues that we need to begin to really find solutions to. And as the development bank, we would hope that within the implementation of the 2030 strategy, we would see EBID sort of taking the implementation to address these specific issues. When it comes to SME, the conversation on financing, it's one that really determines whether or not a company or a private sector entity is able to grow or otherwise. We know that if we do not prioritize economic development, economic growth, and transformation in the region, we will come back after 30 years or after the term of the strategic plan to begin to have these same conversations about how we need to prioritize SME development. I think that moving SMEs and private sector startups from the phase of a startup and having the capacity, developing some fundamental capacity to be able to service a market or provide a good or service is important. And the role of finance must begin to be part as the single most important factor that would determine the success of otherwise of these institutions. We have seen that a lot of commercial banks, and understandably so, would sort of prioritize collateral as the precondition for advancing financing because they are looking at risk management and looking at being able to recoup the loans that they advance to private sector players and making sure that shareholders of the bank are seeing that they are delivering on that mandate. Yes, we expect that the development banks, particularly EBID, would also be able to advance on that. But I believe that institutions like EBID has a much more important role, given the challenges we have in the region and the fact that companies that want to scale still have the challenge to access financing. It isn't that we do not have the market to be able to scale. We are a region of over 400 million people. And with the ECOWAS regime, we know that the market is open. There is opportunity across borders. If you are producing in Togo, you don't just see your production or whatever goods you're manufacturing as just for the population of Togo. You are looking at ECOWAS as over 400 million market, and being able to scale that operation is what would determine whether or not you would be successful or not. Now, we know that when it comes to securing financing, we know, yes, companies can show that there is the market. A company in Temale, the northern part of Ghana, can say that, yes, I have a very brilliant idea. I want to manufacture, let's say, cosmetic products based on shea butter. I am importing my resources or my raw materials, part of it from Burkina or Cote d'Ivoire. I am also having the human resource on the ground to be able to scale. But if we are not able to solve the issue of their ability or an SME's abilities to secure funding for expansion, we would have a lot of SMEs remaining very small in their operations and not being able to build that capacity to scale and export to the neighboring countries and taking advantage of the markets that we have. We've seen that intra-Africa trade is increasingly growing, and AFCFTA is also supporting this effort with the protocols that have been put in place. However, if we do not begin to address the issue of industrial transformation, how do we ensure that we are not just exporting raw materials among ourselves and importing finished goods or semi-finished goods from outside of the continent? We will continue to have the conversation of the lack of industrial capacity development on the continent, even in the next 50 years. And so the hard work for having an industrial financing framework that supports SMEs in, for instance, agro-processing, in logistics, to begin to scale beyond their national borders and to begin to take advantage of the regional markets and position them to grow. If we do not solve that challenge, we would not be able to address the issue of unemployment, of insecurity. We would not be able to see the continent being able to scale in its productive capacity and be able to produce the goods that we consume on the continent. Raw materials, yes, we have them in abundance, and we have to begin to also see that our farming systems and food systems are expanding. We should have regimes of financing structures that support farmers going into agriculture and large-scale agricultural production. We know that there are issues of risks, and our insurance regimes have also not evolved to the levels that would support the level of industrial transformation and capacity development that we expect. And we are hoping that EBID, in outlining this strategy, would begin to engage with the right stakeholders. The public sector has put in place a number of regimes in the individual countries. We are seeing countries prioritizing power generation and power distribution. This is important because without power, you cannot begin to talk about industrialization. We are also beginning to see that there are some conversations between our standards authorities. It is sad that if I am to produce, or if you have a company in Cote d'Ivoire producing, let's say, chocolates for the region, it isn't enough that the Food and Drugs Authority or the Standards Authority in Cote d'Ivoire has certified that this product is good for other markets. We have to always subject our goods into multiple regulatory regimes that really sort of extends the delays that we are encountering in cross-border commerce. And so we want EBID to continue to engage public sector as it has continued over the years to do. But we think that the private sector as a key player in economic activity must begin to become the key stakeholder that is engaged beyond just the public institutions. We are galvanizing as a chamber, we are galvanizing private sector across borders and trying to find synergies along specific industries, whether it is the textiles or pharmaceutical manufacturing or agro processing or logistics and infrastructure development. We are beginning to see that this engagement with the different players, the different private sector partners within these ecosystems and within these sectors, it's yielding some results because we are beginning to see the real issues that are confronting agro-processing companies in Ghana, being the same issues confronting them in Cote d'Ivoire and Burkina and Togo. And so being able to bring some of these stakeholders together and beginning to streamline the conversation, if it is about textile manufacturing, where are we having the cotton production at, and what would it take to begin to move from just cotton production to developing a regional textile manufacturing hub that would service the sector. And so not just textiles, but all other sectors that require that industrial capacity building and industrial support, we are beginning to engage. And so we would want to see EBID play a key role in holding the hands of SMEs and supporting them, giving them the capacity building required, but also coming in after capacity building to provide the necessary funding required to ensure that we move the SMEs from being small producers or producing goods and services at a very small level to scaling up in their production. And so I think that this would be my introductory comment, and to once again commend EBID for its continuous engagement with the private sector and positioning the private sector as the true engine of growth in the sub-region. Thank you.
Thank you for the contribution. Thank you for flooding the bank and its new strategic plan. We will continue on this topic. We want to talk about the segmentation of the perimeters when we are mobilizing funds. There's no development bank at the top and commercial banks at the bottom. We are all development partners. In the bank's audit mechanism, there are mitigation measures. The bank will not extend a loan 100% to finance a project, or in its policy, it will say, for instance, that the output is such that we have a list of banks to launch a common project. It also involves improving the results. I would want to invite Mr. Michel Gaffon of EcoBank, who has listened to the observations of Madam Benita and the strategies of EBID, and also the relevant presentation. So as a commercial banker, what is your vision, your opinion of this new plan, and how do you position yourself? Our participants who want to have a first view and a close cooperation with its participants. Dear participants, it's a plea. I want you to participate in the chat and ask questions so that the first session will be exclusively dedicated to Q&A. So, Mr. Gaffer, you have the floor. Thank you, Mr. Moderator. First of all, I want to thank EBID for what it has set up to support SMIs and SMEs. Particularly 22% for SMEs is quite huge. This is something that is commendable. I would also want to thank the partners, that is EcoBank, namely Parakou, the branch of Gandhi and AFG, and also International Finance Corporation, IFC. I would want to also thank the EcoBank Group for everything that it has put in place, that is the products made available to SMIs and SMEs to finance their projects, and also the financial products that assist SMEs and SMIs in their development. On the issue of financing SMEs, we should acknowledge that the state also have a role to play through a lot of initiatives, namely the Ministry of Trade, the Ministry of Promotion of Women, the Ministry of Agriculture, Finance, SMEs and SMIs. But we should also acknowledge that the journey is still long, whether it is SMIs or SMEs. EBID is looking at its strategies to promote their growth and to put emphasis on the financing of SMEs. I want to just give some figures. Last year, what EcoBank Togo did, I won't say ETI, we financed 13 billion CFA for the different projects for SMIs and SMEs, which are about 204 SMEs that receive this funding. Since 1st January, we have financed 97 SMEs. It is not a huge number, but these figures could be multiplied by 4 or by 5, just that the constraints that we have, namely access to funding, and then the documentation required by banks. If we didn't have this, we could have multiplied this number by 4 or by 5. But why is it that the banks do not like to sufficiently support SMIs and SMEs? With your permission, I want to list some elements that financing of SMIs and SMEs don't help. These SMEs are about 85% that most of the studies conducted have shown that these enterprises or companies have difficult access to find funding, either long-term or medium-term. This difficulty of access by SMEs are related to endogenous factors due to the SMEs themselves, and then also the system in which they operate in the union and also here in Togo. Apart from these factors, the financial sectors are reluctant to lend monies to SMEs because of the interest rates being high. In the face of all these challenges, the banks will have to find means and solutions and guarantee to provide funding for SMEs. In the case of EBID, it's right. EcoBank on its part will also come out with these strategies to assist SMEs and SMIs. So what we've tried to do is we have identified the problems to start with. The first problem we identified is the lack of training in entrepreneurship on the part of SMEs. The last time in the African Trade Union, African Free Trade framework, I was saying to the SMEs that they do not get access to funding because the banks have limited knowledge about you. If Madam Brigitta can agree with me, if you ask for money, if I don't know her very well, I cannot extend or grant her any loan. So I'll have to try to get a lot of information. But if I know exactly what she's going to do with the money, if I have sufficient knowledge, then yes, I will be in the position to lend the money. So that is one of the problems facing SMEs. The second thing we identified as a setback is the lack of organization and efficient management. This is key. So these SMEs and SMIs be organized. The same person should not be managing director and be the treasurer, and the same person being the commercial manager or seller. It creates a problem. There's total confusion of SMI leaders between their property and their company. This is what we observed on the ground. And also the attitude that they demonstrate vis-a-vis banks in their projects. They want to control everything themselves, and this hinders development. The fourth thing is the inadequacy of equity or own funds. To be able to have adequate funds, there must be a correct matching between the project and the needs. Fifth point is, in terms of difficulty, is that the tax pressures. There is a tax pressure on SMEs and SMIs who do not earn sufficient income. These are things that make it such that the SMEs and SMIs do not open up, and the banks, and as a result, the banks do not have sufficient information about them. And a lot of stakeholders have loans related to guarantees that the SMIs and SMEs find difficult to provide. The seventh thing is that SMEs here in Togo, even if they are in Lome, it is only the Lome market. But today, with the digital presence, SMIs and SMEs should open up to the markets in the sub-region and and Africa. And finally, the regulation of SMEs and SMIs, which makes it impossible for them to develop. So these are some of the points that hinder the development of SMIs and SMEs. Now, let me talk about the solutions that we are proposing to solve all these problems. With your permission, I don't know whether I can continue. Yes, we can allow you to go on. Thank you very much. The solutions that we propose are proposals that SMEs should have the necessary basis for their success. We have the habit of saying that we need a huge structure, we need a huge administration, but then they should have these fundamental structures, that is General Assembly, Board of Directors, and then the Operations Department. This is important. We organized webinars such as this, and we invite SMEs and SMIs to come and follow this training as to how SMEs and SMIs to see this, even if they are 4 people, to see how they can get these 4 structures. The other thing is that SMEs and SMIs should have principal duties. By that, I mean that they must have a development plan, that is planning. It must have a good organization, and its management must be efficient and simple. Today, we have a small softwares that can help us to find some traceability. So they should have a control system, even if it is at the preliminary stage. These are some of the things that assure the banks, even if these institutions like EBID put aside 22% to support SMEs and SMEs, the money, we must give money to SMEs who in the next 2 years will not be problematic. Apart from this, EcoBank has provided a non-financial support for SMEs and SMEs. We have partnerships with the huge markets such as the African Trade Framework. And this, a lot of SMEs and SMIs don't know it. Our platform is free for people to consult, and they can obtain information to grow their activities. And all of this is free on my Trade Hub platform, and it covers all the markets of all the countries of the African trade framework. So SMEs that produce sweets here in Togo can put this on the platform, and a company in Ghana or can identify and order this, so they can go online and start commercializing this. We also provide financial solutions. The three major ones that we do is investment, everything that is investment. EcoBank plays a part. If it is a project to buy vehicles or a project to build the head office of your structure, EcoBank finances that. We also finance working capital. We also finance funds to buy raw materials. So as I was saying, these are some of the elements or areas in which EcoBank intervenes. We provide guarantee portfolios, and also guarantee funds. So this is what we do in a nutshell at EcoBank. We thank Mr. Jaya for his intervention that has been very rich. Now, we have to speak the truth, and we have the truth before us, and we have the solutions also, and you have proposed the solutions. So all the participants, thank you. In the follow-up, we are going to move to session 3, which has to do with the development. To talk about this,
I would like to call on Simone to share her experience, and also would like to quickly call her to give us her view regarding the EBID strategic plan, particularly the private sector dimension in more specific. Simone, once again, you have the floor. Thank you, Mr. Gosu. Moderator, thank you for your brilliant moderation, the way you moderate. It's a pleasure for me to take the floor, following all that has been stated so far. It's indeed a pleasure to be here with you and to find myself in a forum where discussions are very close, deep to my heart. I note that there's a lot of synergy of action which we can start from the onset and to work together and to go directly, John, what Mr. Ward said. for which we were very delighted. I believe EBID is playing its role, and this adjustment of the strategic plan has come at the right time, where presently we are talking about a funding of SMEs. But also based on the experience that I've had, oftentimes it's not the lack of resources, but the capacity of the SMEs to access the resources. I think we need to put in place a mechanism and to throw light on how to accede to this mechanism that would enable to support the SMEs. And I commend the EBID initiative in this area on the funding, of which I know that resources are going, first of all, to the primary bank, then to SMEs. It's now these SMEs have a duty to make themselves bankable, eligible for funding in order to be able to access these resources. And on this note, I would like to say that the SMEs stop being just a channel for survival, that they should rather be engine of economic growth. And for this, we need to have a favorable environment. The state does not have the role to lead SME, but it has the role to put in place a mechanism, the environment that is favorable, that promotes the growth of SMEs. And indeed, that vision is shared. That is why what has been ongoing for some years. This is based on the fact that, that we have assessed the situation because the environment are different. If you see what is happening too is different probably with what in Senegal. So an analysis would enable us to know the true situation and to know the kind of factors that you have to put in place. Mr. Guan said that the resources will come. In fact, the diagnosis, the analysis will enable you to give, to throw light on the obstacles which the SMEs encounter. Talking about policies or the conditions, institutional conditions that are favorable. I'm talking about Togo. I would list five policies, five key areas that are contrary to actions which we can see, which, in my opinion, provide the support to our private sector, our SME. The first point I would mention, presently we have a framework that a framework for dialogue and consultation between the public and the private sector, and that framework was put in place by via a bylaw, a decree. It's known as Committee for Consultation between the state and the private sector. It's a private framework that enables interaction between the public sector and the private sector and to outline the difficulties and together find solutions. I would secondly mention the existing of a legal framework that exists and a favorable regulatory framework. You will see with me that there are various one-stop windows that facilitate administrative transactions for SMEs, and these one-stop windows where activities are carried out with lightening of tax burden. It's true that SMEs will have a lot to say, but I can tell you that a lot has been done. If you look at the finance law of 2026, a lot of initiatives have been put in place. I would want SMEs to avail themselves, because oftentimes it is the lack of information. Sometimes they remain with all information that they have. So you can see that a lot has been done now to improve the system, so that actions have to be spent, enhanced, and further supported. And thirdly, which is access to funding, which is also, which is the role of the state by putting in place concrete mechanism that enable the SMEs now to access to access resources which they didn't have access to in the bank. The state does not finance SMEs, but it put in place a mechanism through financial engineering enable SMEs. And I will talk about the external AMPGM. AMPGM is a structure, is a state parastatal which since the year 2026 has been operational and supports SMEs at several dimensions regarding small and medium enterprises, because you also need to define. We have a charter for SME. We need to really identify what is an SME in our environment, and to know we're proposing solutions in the light of the difficulties which SMEs encounter. In the light of, there are two financial solutions that are key that exist, namely guarantee of financial assistance and the guarantee of bank support, because SMEs always put it forward, because where the bank always ask them to bring guarantee because activities are deemed as risky, and for SMEs that are already based and which want to operate, they should have a background, historical background that enables the bank to know what is the level of activity. But beyond that, the bank also requires coverage, so that it's in that line that we have proposed a product that is known as a bank guarantee, which enables you to cover 50% of the risk which the bank is on. Now, this product, the interest is that the credit is facilitated. The interest is that the banks which initially were hesitant on going to certain sectors, they can now diversify their portfolio. And presently, the guarantee enables also to reduce the risk which the bank is bearing, and but also to reduce the cost of the credit of the facility, because when the risk is shared, the cost of the credit is reduced. The second product has to do with support on over a period of five years, with resources that enable you to start up or to help the activity to grow. Let me specify that we do not support the SME perpetually. My objective is just for it to kickstart, and then for it to be eligible to the mechanism of intervention put in place by the bank. As I said, we are an intermediary between the SME, the state, and the bank. What we also do is to enable them to start up. There are some sectors that are deemed risky because there are not a lot of information to assess the sector, and by opting to support SMEs in this sector, we know that there's a turnover, that SMEs that need to be supported. That's why we're taking to risk on kickstarting. And fourthly, for the initiative vision, I will talk about access to the market. The state of Togo has, over a period of 5 years, have put in place access to public markets, namely, the SMEs have to the tune of 20 to 25%. SMEs that are managed by youth or women, they can access liquid resources. This is a measure that is very strong for SMEs. Sorry, we are losing the sound. Some concern on regarding connectivity. Maybe we'll soon get again. Dr. Gosu, would you go to the next person? hoping that we get back to her. It looks like she's back. Are you listening? I was talking about the last issue of my intervention, which relates to access to technical support. Oftentimes, SMEs raise the issue of access to resources, but in actual fact, as I've stated, it has to do with their ability to utilize the resources. And when we support them to enhance their capacity, to build their capacity, when we help them to be eligible to the funding mechanism, then they are able to make them bankable. Let me come back to the observation made by Mr. Gafar a while ago. I would say that I quite agree with him with the analysis he made regarding the difficulties which SMEs encounter and the solutions to enhance their capacity. But oftentimes, what happens is that the availability of resources to build capacity, because the SMEs oftentimes do not have resources to to go onto training in order to improve their processes. We at we support them to have access to subsidized funds to enable them to access this support, and this is part of an intervention. I mean, we provide it to about 60% of them, because it's rare to see an SME provide a project that will be immediately accepted. There are some actions that need to be done in order to make the project to be eligible, and that's what we do. We propose a wide range of support, and I would say that these are support that are born up to about 90%, because we also insist that there should be a support. These are support that we propose, and these are costs that are available to be borne, that are difficult to be borne by the SMEs generally. I would want to say that actions are made, mechanisms have been put in place. I therefore urge SMEs that on this panel to get themselves to be enlightened. There are lots of activities that first of all, is must get the information. They move towards the information. They must move towards the entities that exist that would enable them to find a solution to their problem. Maybe I would come subsequently later on the other issues of support. Thank you, Madam Simon, for the intervention that is quite rich. We have identified a lot of areas of synergy that are likely to boost the SMEs in their quest for funding. Practical steps. There's one thing that caught our attention that has to do with the regulation. Stakeholders do not look for information and regulation, a regulation that could be either in a finance law or information that has to do with the various guidelines or orientation from the state, or when the state decide to boost agriculture or industry. All of these could be in a text. So the state should have regulated bodies to lay emphasis on them. So, because if a stakeholder chooses to submit a funding request, that request will be taken into account very quickly if it's the part of the consistent with the regulation. For me, this is in line with always say that my people are dead. My people died for lack of knowledge. My people perish for lack of knowledge. And then take into account the facts made by Mr. Michel Gaffon and then Benedicta herself, lack of information, lack of or absence or shortage of information impacts negatively impacts them. So then we need to sensitize them and urge them to search for the information so that they can be able to access the information and to carry out the activities in the most efficient manner. So I will now go to the modalities of funding. I will call on the director Ish to talk about the tool for funding of EBID as well as priority sectors, noting that the key objective of this webinar is to discuss on the core objective, of EBID. Mr. Gua, you have the floor. EBID in EBID, we have two types of funding for the private sector: direct funding and indirect funding. I will start with direct funding. That is much the indirect funding concerns the lines of credit which we extend to the commercial banks, to the local financial institutions to enable them to fund SMEs and small SMEs. We extend this line of credit because EBID has a regional scope, and we believe that the commercial banks are more suitable to work with SMEs, and they know this MSC better. When we extend this kind of funding, we ensure that the objective of the funding, that's to say the sector that is targeted, is monitored, and we try to put the pricing to ensure that the pricing, the rate is soft, so as to enable the SME and SMIs to borrow and to make their activities to be viable or profitable. That's what we did. We have worked with almost all the banks in the UMOA zone, and must say that averagely we have injected about 150 billion to the commercial banks every year, and in English-speaking countries of Nigeria, where we have about $300 million US, and in other ECOWAS member countries, namely Sierra Leone and Liberia, which we are trying to support in this indirect funding in order to access to touch SMEs that do not have direct access to EBID. This enables us to add value. For us, our duty is to intervene where the impact of commercial bank. We are not acting as competitors, but we just want to strengthen the activity. So this is a very important activity which has been developed in the last years of our strategy plan. We have invested almost $400 million in this indirect finance funding, and this year alone we would have a commitment of about more than $400 million with important groups such as Chorus Bank, Vista Bank, and many other ones. Just to tell you what we are doing in all ECOWAS countries. So there's a follow-up to ensure that this funding benefit SME and SMIs with rates which we would want to be below 2 digits. The second part of funding is direct funding, and that is why we play the role. We have medium and long-term loans. It's the possibility of which a development bank has is to give loan with maturity, a certain maturity, and with rates that are relatively soft. So we have medium and long-term loans. Sometimes we go up to 15 years of financing. For some projects, sometimes 10 to 15 years grace period that taking into account the physical execution period. We also short-term period and trade finance activities. That's to say, every activity that has to do with funding of commodity, agricultural sector, gas, petroleum, oil and gas sector. We have funding of between 1 to 3 years, and this is done in order to support all stakeholders that are involved in trade finance. In most of our countries, you know that the fertilizer sector is very sector, so they need this kind of short-term funding at the beginning of farming season. We have oil and gas. We have other activities, in foodstuff, which we can extend funding for short-term activities, sometimes below 1 year. We have even 6 months revolving activity. We also sometimes the amount could be quite significant. Sometimes we could go into a transaction up to about 150 million, and I believe that for most of the business operators in this part in these sectors, they can avail themselves. They can get in touch with the bank. We have equity participation for some strategic project where we believe that the bank should support this project to enable them to ensure a smooth implementation and for the project to have an impact at regional level. I would want to remind you that the bank was one of the first shareholders in the EcoBank group. We are also a major shareholder in EcoBank. You will recall that without Esquire, it would have been very difficult to travel from maybe Lomé to Cotonou, and maybe we need to pass through France before getting back to Africa. In strategic projects such as this, the bank takes equity, so as to ensure the viability of the company. We have to have equity in other bank in order to support that banking group. We have some equity in some. We have stake in groups such as Fidelity, so that they can bank, so that they can play their role. Another modality has to do with the guarantees. More and more, the bank provides guarantee. But these are things that we regard what is a structuring project. We have also syndication transaction. Syndication and transaction, that's where as a development bank we can bring our skill. Today we are putting in place programs of national champion in very strategic. If you look at most of our countries, when you are talking about development of infrastructure, it's foreign companies that are coming to carry the key. Today we are looking in each sector of it. We are working closely with certain countries to develop national champions to build their capacity, and to build their capacity, we need to work them right from the onset of the project. For this offer of financial structure, which we are doing, we are working very early from the onset with companies. We structure companies for the funding. We help them to present a bankable project, and then we support them by providing working capital and capital for exports. We could there's a project we are working presently in Ghana for a transaction of about $300 million, and we also have another deal with Gold. So we support the SMEs that are involved, companies that are involved in this kind of transaction, they can contact the bank. We are not just here to provide funding, but we provide technical assistance and to be involved in financial engineering in all sectors, infrastructure, energy, hotel management, accommodation. And so to build a road, we do not need to look for a company in Europe or in Asia. So the bank wants to play that important role. So I want to call on all the business operators to support all the capital industries. We can support you, right? And to even restructure your company. All you need to do is bring the project so we can see the kind of funding that we can mobilize to support you both for working capital and on capital expenditure. To avoid monopolizing without trying to monopolize the flow, I want to say that the level of funding which we provide in medium and long-term projects is very difficult for us to act in projects that are below either 2 to 5 million, 2 billion. We try to extend lines of credit to commercial banks. The bank is trying to get on tickets that are somewhat high in order to ensure additionality and impact. We can go on projects up to the tune of $150 million. We can ask waivers for projects that are quite significant. Generally, we require for between 25 to 30%. That is as equity, that's as participation on the part of the SME, so as to see their commitment. It's difficult to ask for an assistance when you yourself you do not bring in your own portion. And we do this based on a case-by-case basis, based on the sector and the size of the project. Regarding the sectors, as I've mentioned earlier, the bank participates in funding of agro-industry, industry transport, hotel management, and education and financial sector. Presently, we have a special offer in the renewable energy, and that will enable us to finance to certain SMEs that we bank also involved in co-funding with commercial banks and syndication with certain commercial bank and development bank. We also try to have impact on private sector projects, because for us, the private sector is the engine of development, and the bank believes that the financing of the private sector will enable boosting of our economies in the years to come. Mr. Moderator, I would like to stop at this point, and I am open to bring any clarification or additional information. Thank you, Mr. Moderator. Let me ask just a question, and probably I will give you the floor, because I know that you were supposed to have gone on a mission. Question. Certain participants consider that, but when SMEs are providing loans, the issues, the guarantees asked by banks, the list of guarantees is quite long. I'm sorry if I'm exaggerating, and the guarantees weigh them down. And some promoters say, if we have so much money to pay for guarantees, we would not have come to you. And in your strategic plan, what in your strategic plan, what are the measures that are put in place to address this issue?
Thank you very much, Mr. Moderator. We are talking about financing conditions and the guarantees that they ask the operators, the promoters. Exactly so. Operators and economic players, they always complain about the type of guarantees, sureties that they are expected to provide. And they have to provide mortgages, mortgage their properties, and so on and so forth. Now, if you look at it holistically, the cost is very huge. Although in many cases the rate might be low, but when you look at all that is expected from them before they give them the financing, is quite huge. Now, as somebody who has been there, what can you say about that? Thank you very much, Mr. Moderator. I would like to explain that the first thing is the project itself, meaning the project must be well structured. The project is well structured and bankable. The need for the guarantees are a bit cushioned, they're a bit softened. So the nature of the project itself is key. The second thing is to look at the structure of the capital and to look at the expected cash flows. Now, if the expected cash flows are such that the bank will be comfortable, then the issues about guarantees are not too much. Again, what we try to do again, we want to reduce guarantees that will cost the promoter. We want to back our loans on the viability of the project. And that is the difference between us as a development bank and other commercial banks, because we need to also ensure that there is financial sustainability of the bank. The reason why we will sometimes call on the guarantee institutions that are sometimes less than 25% of our commitment. But the first and foremost thing for us is the nature of the project. If the project is well structured, then the project will serve itself, because the project serves as guarantee for itself. I therefore would like to ask all the promoters to structure their projects well. You have firms that can support you in putting your project together. Do not also hesitate to contact the bank if you need any assistance in putting your project together. We have experts within that are well committed in supporting you. We also want to ensure that a security package must be also structured well, as Dr. Gosu mentioned. Thank you, Dr. Caesar Goa. And I would like to sum up your submission for our participants, because this is a key interest for all of us. One is that the credit itself is not the guarantee, but it is the capacity of the borrower, the trust that the lender has in the borrower. Secondly, the project must be well structured to ensure that the project has a reliable cash inflows to enable the borrower to pay back at any maturity is that. As you mentioned, the best guarantee for a project is the project itself. It is also crucial for the project owner to keep track record. This is very important so that the lender will be sure that the borrower has a capacity to pay back. We thank you very much for highlighting all this, and we are going to take them into account in putting our projects together to increase our capacity of assessing financing. We will like to inform participants that Ms. Director Goa will take leave of us. He has other commitments, but however, we will continue with our experienced panelists. And quickly, let us go to session 4 of the webinar. It has to do with assessing EBID's enhanced private sector and SME financing. We will give the floor to Benedicta Lassie, who is the executive chair of the Africa Trade Chamber. We would like her to explain to us how SMEs and SMI access financing and what are some of the barriers or challenges they face in accessing financing. We also would like to understand what the role of Africa Trade Chamber is in supporting SMEs and SMI, especially in promoting funding in the private sector as a whole. Madam Benedicta, you have the floor.
Thank you very much, Dr. Gosu, and also Mr. Goa for that presentation on the project financing. So just as a way of distinction, sometimes when the conversation around SMEs are had, there is an attempt to describe all SMEs being the same, or describing them as having the same conditions of work or operations. Now, sometimes you have most of the descriptions being ascribed to, let's say, SMEs, either in the food or agro-processing space, but there could be SMEs developing power projects. As a chamber, we've had to work with many companies who are undertaking projects, whether in the power sector or in the industrial sector or manufacturing sector, as well as even aggregators who are not necessarily sort of producing, but they are sort of aggregating various commodities and exporting outside of the countries. Now, when it comes to each of the different types of SMEs, I agree with our colleague, Mr. Gafan, from EcoBank, that says, yes, there is a need for SMEs to be able to meet certain conditions of financing before the bank can lend to them. But we also know that given the very nature of SMEs and also startups, sometimes these conditions are almost impossible for them to meet. And you would ask yourself, how do you expect a young person who probably is approaching entrepreneurship as a means of survival, but have sort of discovered a huge opportunity to scale their business, to have the required collateral in terms of assets, fixed assets, to be able to provide that collateral for a particular loan. And this is where we are saying that, yes, we understand that the requirements exist, and banks, commercial banks, including DFIs, would have to meet certain conditions, would require companies to meet certain conditions before financing can be advanced. But what we want to advocate for is that we should begin, and the development finance institutions like EBID, I'm excited. EBID is working with EcoBank, the Vista Bank, and other commercial banks in the sub-region to sort of partner with them to service the SME market. But we would want to come up with some frameworks that allows for companies or SMEs looking for funding to be able to assess some of these fundings. The challenges are not just about the repayment or the capacity to demonstrate that a company can repay, but we want certain frameworks put in place to guarantee that even without companies being able to provide guarantees or collateral, there is a framework, whether it is invoice discounting or other frameworks that would support SMEs providing services to be able to access the financing markets. Again, on the issue of interest rates, we have seen different markets with different conditions and also presenting different interest rates to companies. The challenges with the financing limits companies. So a company in Ghana cannot just say that, yes, the exchange rate in let's say Norway is very small, so we are going to just apply for funding from Norway or to secure funding from Norfund or any of the European funds that have favorable interest rates. It is a question of jurisdiction. It's a question of where you can assess the funding from. And so if we do not have our banks working together to put in place frameworks that would de-risk some of the investments that they are making, it makes it very difficult for the SME if you put the burden of proving that a company is matured or has the potential to be able to grow with the right funding from DFI or commercial banks. If we put that entire burden on the SMEs, I can tell you that we would not be able to solve this challenge in the coming years. We know that, yes, SMEs have to keep their houses in order, and a lot of them have actually taken on that challenge given the opportunities that have been presented to them. We've seen SMEs sort of engage with other companies, engage with suppliers, engage with market players that are willing to, for instance, purchase from them certain goods or services. And really what they need is some sort of bridge financing to be able to service that opportunity that they have. But to go back to the point that my colleague from EcoBank was mentioning, if we want to stick to the rigid financing regime of, yes, you need to provide collateral of this sort of magnitude to be able to serve as a security to a loan, it would be practically impossible. And this is why government intervention and the different government frameworks that are putting together to support SME is important. Simon mentioned what is being done in Togo. We've seen in other markets, South Africa, Ghana, where there is a framework for supporting SMEs or financing SME activity without necessarily the rigid demands for collateral. Now, we want frameworks that would hold the SMEs accountable. We are not saying that we don't want SMEs to be accountable, but we should recognize that the very structures of risk mitigation that demands for the KYC to be rigorous are the very things that have kept the markets or private sector from growing all these years. And so if we want to really transform private sector involvement in economic transformation, then as financing institutions, as commercial banks, as DFIs, we have to begin to work with central banks to begin to also have conversations around how do we put in place mechanisms that ensures that access to finance does not in itself become a challenge to the SMEs and entrepreneurs on the continent. We talk about Dangote having achieved tremendous success in terms of being able to scale and build his industries. But you would attest to the fact that without external funding, Dangote would probably not have been able to achieve what he's been able to achieve. And we want that confidence in SMEs across the region, not to say that they should just be given resources without any accountability, but we are saying that the regimes, the frameworks, the products being developed by commercial banks to service the SME market must be critically looked at. We should take out the bottleneck. We should also begin to look at financing at what cost? What is the cost of funding for a particular company? If I am an agro processor and I'm producing, let's say, chocolates in Ghana, and there is the need for me to export this chocolate to, let's say, Portugal, where there has been some approaches by retailers or wholesalers in that market for me to supply that good. Without being able to provide a collateral, I'm sure that with those sort of purchasing orders and other instruments that can show you or show the banks that indeed these companies are credible and have the market demands and have the capacity to scale, I think that those should be some of the frameworks we must begin to see commercial banks put in place to support SME. If we are to go by the current standards of financing or the regimes existing now, I will tell you that we would not see the scale or the progress that we want to see in the coming years. We know that, yes, the risk factors have not also inured to our benefits. We talk about the cost of funding, but we also talk about the need for the global financial architecture to be looked at again, because the funding that EBID is providing to commercial banks to be able to on-lend to SMEs is also pegged at a certain risk level. If you see countries where there are wars and the whole economies are sort of affected by certain development or conflict or security challenges in the global north, they don't even receive the sort of risks ratings or rating agencies do not give them the sort of risk profile that they give African countries, like most of the African countries that have seen significant levels of stability and growth over the years. We have that challenge to face. And we understand that that makes capital expensive even for our DFIs. But in order to go out of the current predicament of not seeing a lot of private sector growth and seeing a lot of indigenous businesses scaling up and servicing the markets, we need to begin to have conversations around long-term development. Yes, trade finance is very easy because it's a short window and banks love that. But beyond trade finance, what would transform the region and what would prevent us from seeing the instability in the region is if we give young people and SMEs the opportunity to have financing to be able to scale on the production of their goods and services. One SME could be operating and employing just 5 people, but with the right support, in no time would be employing about 100 or 200 people. Those are the sort of developments we have to begin to prioritize, that long-term financing for some of these companies and small-scale institutions must be prioritized if we want to see development, consistent development in the long term. We cannot focus on trade finance and expect that we would come out of the current situation. Trade finance only creates jobs abroad. It only creates opportunities and abroad, and we only import finished goods, which really do not add any value to our economies, but rather affects our foreign exchange. And so we want DFIs to begin to see this, the financing frameworks as they engage with commercial banks and begin to develop products that would really support and hold the hands of SMEs. We are not saying that give monies to SMEs and leave them to determine how they scale or not be accountable. We are saying that it is important for us to develop ecosystems that would truly support SMEs to grow. We have to pick winners, and we have to pick winners in the right sectors. The right sectors means we have to begin to prioritize SMEs in the value addition space, SMEs that are able and have demonstrated some capacity to scale. Yes, we would not be able to finance all SMEs, but those that have demonstrated the capacity to be able to scale should be supported. We also have seen a number of project promoters in the power sector, in the energy space, who are trying to undertake projects that ordinarily our governments are supposed to be undertaking. If you have a project promoter trying to develop a power project to service a particular country, for instance, you have Liberia, where the installed capacity of power is 73 megawatts. You need private sector to come in to invest. Now, if a private sector says we are going to Liberia or we are going to Sierra Leone to invest, we want to begin to see EBID investing in these projects, even as equity partners to the project, and showing that confidence and working with private sector to deliver on some of these critical projects that is really required, that governments ordinarily are supposed to have the primary responsibilities for. And now private sector is looking to go into those sectors. That requires a lot more commitment from EBID and other DFIs and other commercial banks to have that confidence and support into going into these projects, not by simply saying that these are our checklists, and to the extent that you do not meet these checklists, we cannot advance you the credit, or we cannot participate in the project. How are we even financing some project preparatory facilities that would support in these project development? It is an entire ecosystem, financing ecosystem rethink that we need to see. It can't just be the simple products that we bring on the market and we offer to our customers as commercial banks. It must be a framework or an ecosystem, a financing ecosystem rethink that involves governments, that involves development finance institutions, and that involves financial commercial institutions as well. We think that we need a revolutionary idea when it comes to financing of SMEs. And also, as chambers of commerce with members undertaking different projects and private sector participants showing that commitment, we want to be able to talk back to private sector and companies that we engage with to say, yes, there is a framework to support you. There's a framework to hold your hand, not just to look at you at where you are and saying that because you cannot meet these thresholds, we leave you there. But how do we work with those institutions that require funding to say, yes, you are not there yet, but you need to do X, Y, Z to be able to get there. And so we want to see financing institutions support SMEs in the journey to get to the place where they are building capacity to be able to receive and to be able to qualify for the funding that is being put out there. Thank you very much.
Merci infiniment, Benedicta. Thank you so much. Thank you for your contribution and your explanations and comprehensive view on the matter. We are blessed listening to you. Thank you so much.
Mr. Michael Gaffa, can you kindly give us your thoughts on this? You should also talk about the commercial bank stake on assessing financing of SMEs and SMIs. Can we have your concluding remarks? After which we give the floor to Madame Simone, so we can conclude and open the session for questions and answers. The discussion has been very rich, well structured, that we are running behind time. It has been motivating so far. Thank you. Mr. Michael, you have the floor. Thank you so much, Dr. Gosu. The theme is so important, and I would like to thank EBID once again for choosing this theme, and also to thank them for what they do for SMEs. I would like to touch on what Mr. Goa said, that the project for the SMEs, when you put all that has been said so far together, you'll understand that money is not the problem. Financing exists. EBID is there. EBID put in place structures, and other banks are also available to finance, to give them subsidized rates. So money is not the problem, but the problem rather is the nature of the project and what the SMEs are expected to put together to attract the financing. So their project must be well structured. That is the take home from this. The nature of the project must be such that they should be able to generate the cash flows, not only now, but also future cash flows. The SMEs must have the capacity to demonstrate that. Now, it is true that an SME may not have the capacity to put together the document, the project document, and then also the business plan. They can call on firms, financial institutions to support them in putting their projects together to attract the appropriate financing. There are people who are experts in project valuation, project appraisal, and what have you, so that the project, the SMEs are putting out there must be bankable. And that is the only way they can attract banks. The SME must also show that the tools that they put together, whether they are talking about production capacity, storage capacity, they must be such that they should give the financier the understanding that this project is sustainable. For instance, if EBID want to give financing to an SME, EBID is not only interested in giving subsidized rates to an SME to be able to pay back today, but also to be able to pay back in the future for that SME to grow to become a conglomerate. I would like to crave the indulgence of all SMEs and people who are connected today who want to go into business to work hard to put bankable project together, and also to contact the appropriate firms to support them. I believe everything is available today. whether at the level of the government, the level of private banks, commercial banks, regional banks. Money is not a problem. Systems are put in place, solutions are put in place. SME must also take up their responsibility to promote bankable projects. I do acknowledge that the cost of financing is a problem. But this is a market economy. When a commodity is scarce, there are so many people who run after that commodity. Therefore, you must ensure that in coming after that commodity in this time, which is the money, you have deeper understanding of this market economy and what you are putting out there. The nature of the project must be very bankable, such that you can become a conglomerate multinational tomorrow. I would like to conclude by saying that for us at EcoBank, we also promote SMEs led by women. And I believe EBID also laid a lot of emphasis on women-led SMEs. For us at EcoBank, we have a specific program for women-led SMEs with even lower and more concessionary rates, because it has been demonstrated that women pay back loans faster and better than men. Therefore, I'm inviting women who are into business, who are connected to this webinar, and those who are out there to contact EcoBank for explanation and see how they can have access to our financing. I would like to end by thanking EBID for putting together this wonderful webinar. In fact, this webinar should not only be a one-time event. It should be something that should be done very frequently, because information is key. If you have information, you are empowered. Therefore, it is important we share this set of information and knowledge with the SMEs. Thank you so much, Mr. Michael Kafan. We want to thank EcoBank Togo as well. I would like to give the floor to Madame Simone de Baima for her concluding demand. We believe that your outfit is working hard in promoting the business environment in Togo. What is your concluding remarks on the matter discussed so far before we give the floor for participants for questions and answers? Thank you very much. Before I take the floor, I looked into the chat box and I saw a few questions, and I would like to provide some answers to that, because it is the essence of this webinar. When we're talking about SMEs, it is true that it's an acronym that's put together small and medium-sized companies, but there are many categories of SMEs. Before you go to a financial institution for money, the SME must understand which category you are in. How do I restructure myself? How do I put my books and my home together? So that is a preliminary exercise the SME must do first. Today, we have so many SMEs that come to banks and they are surprised that the bank cannot finance their projects, because the bank needs reliable and existing track record information. It is only an SME that has been existing for a number of years that can provide the historical information to the bank. That is why it is important that when you are an SME, you must understand the landscape of your business. You must also understand which category you fall in. The bank is also interested in your business model, your economic model. Now, the business model you want to promote Does it give solution to a given problem? If yes, is there a ready market for what you want to do, whether you are providing services or you are dealing in goods and services, or you are into the manufacturing? The bank, if all these boxes are ticked, the bank will be ever ready to support you, because without this information, there's no way any bank would like to finance your project. It is equally important for SMEs to understand that the nature of your project will determine the sustainability of your business. And I would like to conclude by touching on a very important point. Now, SME must also understand the difference between a project and the promoter itself. That is what gives guarantee and the collateral to the bank. We want to understand the promoter. Where does he stand? If you are an entrepreneur, you must make a distinction between you yourself and the business you are promoting. And to conclude, I would like to thank EBID for choosing this theme and also for inviting my humble self and my institution. I have noted so many opportunities of collaboration between EBID and my organization. I would like to say that our doors are open in organizing events such as this, because it will serve us nothing if institutions are created but the synergy is not there to mutualize resources and also to discharge our mandate diligently as possible. Therefore, our doors are open to you in promoting SMEs and SMIs in the sub-region. Once again, thank you for this wonderful opportunity, and I believe there will be other opportunities for us to meet again for such an event. Thank you very much. EBID rather should be thanking you. This is not the first time you are taking part in a webinar at this. We are very grateful for your availability. We also would like to thank you for your support and interest to SMEs and SMI. Now the floor will be open for questions and answers. I would like to say that there are experts who are already answering questions in the chat box. And sometimes there might be a B2B intervention. Time wouldn't allow us for me to mention them. However, I will open the floor for 5 questions. Questions that were not tackled in the chat box. The floor is open for whoever may wish to take it. And we believe that our panelists will be happy to give clarification to these questions.
Can you hear me?
Yes, we can hear you. Okay, I see
Okay.
one hand up. Alex Baba.
Okay.
So we'll
Okay.
give the floor to Alex Baba. You have the
Lovely.
floor.
Alex Baba, you have the floor.
Very much for the full program. I want to ask, I'm a business development consultant practicing from Nigeria. Is there a provision for firms like mine to come on board as consultants to help package SMEs to benefit from this fund? That's my question.
I guess yes. So the understanding I'm having is that he's asking for the specific fund that EcoBank and EBID are collaborating on. But yes, in terms of institutions providing support for SMEs and project promoters to help structure their projects, yes, are welcome to engage with us as a chamber. And also, I believe that the EBID private sector team, working with the different banks, because of the way the funding is arranged, usually if it is a particular country, so for instance, if let's say in Nigeria, EBID is working with say Zenith Bank or EcoBank or whichever institution, it would be up to the bank, the commercial bank, to sort of engage with specific consultants to sort of support with the SMEs that would be engaging for that specific funding arrangement. However, as a chamber, yes, we would more than happy to engage with you as a business development consultant to also look at how we support some of the SMEs that are looking to access funding. We have an SME council, which currently we are looking to scale and engage a lot more SMEs on the continent. And some of these support or capacity building in terms of how they structure their projects to be bankable and also financing ready, that those opportunities exist for us to engage. So kindly reach out to me either on LinkedIn, and we can take up the conversation from there.
Thank you.
Thank you,
Very
Benedicta, for your answer to Mr. Baba's question. Answer is accurate and comprehensive. Let's switch to the second question, please.
So the second person is Madame Nkande Ren Nadia Konan.
Madam Nadia, you have the floor. Good afternoon. Thank you for this very enriching webinar. Realize that it's not easy to finance them. And today we are at the second edition of this program. And with the bank, it's not obvious. So what I want to know today is that the bank, through its direct and indirect financing, does it also tackle issues of sustainable financing of SMEs? And how can we work with the bank on these issues of sustainable climate? Thank you. Would you want me to answer Madam's question, Mr. Gosu? Thank you, Madam, for your question. The bank has a strategic plan from 2026 to 2030 that we are going to publish very soon on the website, and it takes account of all issues of SMEs operating in the ESG area. So you get all the responses to your questions. We will publish this. So what I will ask is that, can you put your address in the chat so that when everything is validated, we will send you the digital copy. Thank you very much. I'll do so. Any other questions? I don't see any hands up. You have the possibility of asking other questions, but in the absence of any question, we can close. This has been a very enriching webinar, and it has been very specific on some problems. And we want to thank our stakeholders, speakers, and EBID, and particularly the communication unit of EBID, which organized this webinar in a professional manner on the topics tackled concerning the 2026-2030 strategic plan of the bank that was approved by the board of directors in Accra, in Ghana, by the ministers of finance of Ghana, who is the chair of the board of governors. The bank presented certain things that translate a repositioning, and this is a major event in the life of an institution, and it will benefit the stakeholders of the community. So what we can retain from this is that, first, to reposition efficiently in this plan, the project should be bankable, and the team should be recurrent. And what do we mean by bankability? It means you must demonstrate that the public authorities have the priority to define this for each stakeholder to go and look at the priority areas or domain. We can decide to develop agriculture industry sector, and this project will be welcomed by the regulatory banking institutions. For instance, Cote d'Ivoire has adopted a PND 2013, that is National Development Plan. And as some speakers said, this document has rich information, rich strategies in areas where SMEs and SMIs can take advantage of. Then, the bankable dimension of the project is that our speakers demonstrated that the best guarantee of a project is the project itself. It should be sufficiently well structured to generate a cash flow to enable the enterprise to honor its commitments. So it must demonstrate that at the end of 3-5 years, it will be in the position to cover the maturity of loans. The speakers also demonstrated that we are not just in the financial transaction that involves lending money and waiting for the repay, but you must look at the qualitative nature of the project. Has the project any impact on development? What is its impact on the population? Does it contribute to reduce poverty? So you need to brainstorm on the contribution. Bankability does not only concern the project. Is the project bankable? Is it led by a very good governance, which is also bankable? Do we have the right man at the right place? The promoter of the project, has he got the capacity to lead the project? Is his project structured? Is he assisted by experts, the best of such? It has been demonstrated in the community that it should be a project that is scientifically relevant, and we have projects that are led by people who are not entrepreneurs. So do I know what we call financial KPI, KPIG business? Every promoter should think of himself as being in the laboratory preparing a project. In an entrepreneurship, if I'm giving 10/20, it creates a problem because bankers only look at evidence. So if I don't have the capacity, then I need to get assistance, and we need this in the community. Talking about EBID 2020-2030 strategy, who do we need to contact? We have strategic information, clear ones. Some are dedicated to the private sector, and we have a full department that handles this, and it receives the request of funding, and then they process them quickly. As one of the director said. Now, for the deadline for processing of requests, once the project is well structured, once it has gone through all the stages of structuring and with all the relevant answers to questions that may be asked, the funding or the process will be very fast. But unfortunately, that is not the case most of the time. Sometimes the entities or the departments responsible for projects spend several years, months, assisting the promoter, structuring the project. And when you ask questions every day, and sometimes we request for other documents which they take time to send to the department, all of these delay the time. It is for this reason that our speaker said it is important to get assistance of experts so that they will be able to work on the bankability of the project and also enable the banks to process them quickly. And what also accounts is the disbursement. And when everything goes on well, the disbursement comes quickly to assist the project efficiently. Thank you. This debate is not ended. You have to look for information on EBID's website, www.ebid-ebid.org, and then on the bank's social media, on LinkedIn, on Facebook, and then on X. When you want information, you will find them. And there are entities dedicated to answer questions that you may ask. I wish you good continuation. Thank you, all the participants. Thank you to the organizers. And then thank you, the speakers, for your contributions. Thank you all, and see you all very soon.